marking prepaid expenses and unearned revenues in balance sheet accounts. The company's annual accounting period ends on October 31st. The following information concerns the adjusting entries that need to be recorded as of that date. So A says, the office supplies account started the fiscal year with a $500 balance. During the fiscal year, the company purchased $3,650 of supplies, which was added to the office supplies account. The supplies available at October 31st totaled $700. So what they're looking here is to figure out how much supplies were used during the year and for you to record a supplies expense. So what I like to do with these types of problems is figure out how much of the supplies were used that year. And I like to do that. We have a balance of $500 in the supplies account. Office supplies is an asset, which means it'll have a normal balance of a debit. So during the fiscal year, the company purchased supplies for $3,650, which was added to the office supplies account. So that means you would debit another $3,650 to the supplies account because we're increasing this asset. And then it tells us that the available supplies at October 31st, 2011 was $700. So that's telling us that the ending balance is $700. So what they want you to do is make the adjusting entry to figure out how much supplies expense was. So what they want to know is what the credit side was. How much of the supplies did we use? Simple algebra. So you can do our beginning balance plus our purchases minus some amount equals our ending balance of 700. So with some algebra, that number comes out to $3,450. So now that you know the amount that was our office supplies expense, you're ready to make the journal entry. So you would debit office supplies expense because expense accounts have a normal balance of a debit and we're increasing it for $3,450, and you would credit office supplies because we're decreasing this asset. Does that make sense?